Hello and welcome to another edition of Stock Watch. So I've seen that over the last few months, just how far WTI oil has come since its negative territories in 2020 when the pandemic really started to take shape and hold of the globe. And now that demand in oil is rising into 2021, we've seen companies like Chevron and Exxon really started to see their profits and share prices exceed expectations. And it looks like it's not going to slow down anytime soon with the success of certain COVID vaccinations that are out in the world at the moment, with Europe doing slightly underperforming than the UK, but obviously America as well trying to aim for that 100 million dosage mark in the next few months. So adding to that, President Joe Biden has recently signed a $1.9 trillion COVID relief scheme, and that's going to start probably in April with checks going out of $1,400 a week to people that are unemployed. So this is obviously going to increase probably oil demand as well, as more people have a little bit more money to spend. And the interesting thing about Chevron as well is that Berkshire Hathaway has actually invested into Chevron recently, buying up to 42 million shares. And Warren Buffett, who is the owner of Berkshire Hathaway, his net worth recently surpassed 100 billion for the first time as his shares hit record highs. So it's just looking like it's a decent buy at the moment for Chevron, all in all. And we're just going to wait and see if how far Chevron can go in this oil world, and if we don't get a third wave of the coronavirus. Hopefully we won't, as we go into 2021, where relaxations are supposed to take effect in the next few months across the globe. Then we'll see if it can get even further to record highs. So the last time I looked at Chevron, I was seeing these, big accentuations in the price, but I just want to drag it back to the recent peaks and pre-pandemic levels as well. So as you can see here, we've gone past this recent peak of when the world started to get back into order in the middle of 2020 after the first wave of the pandemic and the first lockdowns ended. Then we've had the move past pre-pandemic levels. So this is at the end of February, before lockdowns really started to take effect. And now what I'll be looking at here is probably this peak of 2020 as we came into that new year. So as I just zoom in to the areas of interest like I usually do, I'm just taking these levels into play because I want to see what the opportunities are. So we've seen a slight hidden bullish divergence here, which could have propelled prices a little bit higher. And now with prices really trading away from the Ichimoku cloud, I'm seeing that there's probably not much exhaustion at the moment. But as we creep closer to this 2020 top, I'll just start seeing, as you can see here, a little bit of an overbought signal here on the RSI. So just maybe looking for prices to start waning slightly. If they do, then the obvious targets will be at the recent peaks that we saw, so roughly about the 109, 110 mark, and then moving down to $100 probably into next week or maybe into April. Just depends how the pandemic goes with the the restrictions that will hopefully not be there anymore. And the same thing with ExxonMobil as well. We've seen a little bit more of a bearish divergence on the RSI, which could see a bit of exhaustion. But again, I'll just be looking to see if we can really start capping off these pre-pandemic targets here. So as you can see here, like Chevron, we've gone past this peak. We've gone past pre-pandemic peaks as well, just about. And now we're looking at 2020 or the start of 2020 peaks in January. So again, if I just zoom in, we're trading very far away from the Ichimoku cloud, which is a very good sign that the impetus is on the upside. And just with this slight bearish divergence, I'm just been a bit more cautious on ExxonMobil, and just to see again if we find a little bit of resistance in this area, then obviously the first key that I'll be looking at is put in a sell position and probably drop it down to the mid $55 range. And then obviously if it keeps descending, then we're looking at the top board of the Ichimoku cloud to go even further lower. So just a few things to keep an eye on oil companies in general as we go into 2021, because obviously there's a high expectation of more antidotes for the coronavirus. But not only that, that obviously leads to a lot more grand reopenings of the hospitality sector. So this will be very, very interesting as well. And obviously with that is the airline industry, which will obviously be a big boost for oil companies as well if that gets back on track. So that's all from the Stock Watch today. Thank you very much for joining me. If you have any comments or questions, please feel free to enter the post and I'll get back to you as soon as possible. Have a great trading day ahead and bye for now.